Let's look at Fred's pay stub, see what kind of information it's going to provide for us. So if we look at the top section here, we're looking at how much Fred earned. We're going to look at Fred's earnings in two different time periods. We're going to look at the current period, and we're going to look at the YTD, which is year to date. Okay, so in this period, Fred earned $4,731.17. And so that gives us a year to date. If we added all the other time periods up till this, then he would have earned $29,400.46. Okay, but Fred's not going to get $4,731.17. So there are some deductions taken out. So if you have a job, you may know that, let's say you work 20 hours and you earn $10 an hour, you earn $200. But you don't get $200. There's going to be some things taken out. Those are going to be our personal deductions. So if we take this gross amount that we earned, we subtract the personal deductions, we're going to get the net amount. Okay, that's the amount that our check would be or a direct deposit would be. So here we're going to see the same information for the year to date for all those paychecks for the whole year. So let's look down here at the actual deductions that might be taken out. We're going to start down here at the bottom because these are pretty much for everybody, taxes. So federal income tax is going to be based on your income. You should have filled out some sort of form when you first started, and it told them, do you have dependents? Tell us something about you, and that's going to determine how much income tax is taken out. The more you earn, the higher your tax rate will be. So federal income tax, and then the next one is Medicare tax. That's 1.45% of your gross tax or gross income is paid to that, and then your employer matches that as well, but that doesn't come out of your check. And then Social Security tax down here, that's 6.2% of your income goes towards that. Your employer matches that as well. So those are the taxes. Everybody pays those taxes. Now, Social Security tax has a maximum amount of income that will be impacted by that, and that number changes every year. So if you hit that maximum amount, you no longer pay Social Security tax on any income above that amount. Okay, so let's look at some of the other deductions this person has. Health insurance. So this employer makes the employee pay part of their health insurance cost. So there are some employers that pay all of your health insurance, some don't pay any of it, some subsidize it. It just depends on your employer. And then this institution, this company also has some sort of retirement program of which this person is contributing towards that. The next one is something called medical reimbursement. So what this is it is basically a savings plan that you contribute money to every pay period, and then if you need it, then you can take it out. The nice thing about that is that this is going to reduce whatever your contributions are to that, reduce your taxable income. So it's only going to impact the federal income tax. The Social Security and Medicare tax are not that will not be reduced because of it, but your federal income tax would be. So if you have a job where that's an option, that is a great thing because you lower your taxable income. And most of us are going to use medical expenses at some point in the year. But you've got to be careful there because if you don't use that, you kind of lose it at the end of the year. So this one also has vision insurance, and then a 401k is a retirement kind of program. And those are typically, depending really on certain circumstances, but that should be pre-tax as well. So if you contribute to the 401k, then again, that reduces your taxable income. And you should, as often as you possibly can, contribute to your retirement. So in a later unit, then we'll discuss 401ks a little bit more. So that sort of explains Fred's deduction. So if you added all that up, you get this figure here, the 2019-67. That should match up here. So this minus this gives us our net amount.